Well, 2016 has been a happening year for the Indian real estate sector, with RERA and demonetization shaking up the system. But private investors remain upbeat on Indian real estate as private equity inflows remain high. We highlight the top PE deals that have taken place in 2016 and what to expect from the coming year ahead.
2016 has been a significant year for the real estate sector in India. While RERA promised to bring accountability to the system, demonetization shook the market, causing many home buyers to rethink their investments. However, experts believe that this is just a short-term blip and expect a more clean and transparent sector to be back on track in 2017. Private equity investors clearly believe in the India story too, with a whopping Rs 483 billion of private equity having come into real estate, a growth of 52% from the previous year.
I think PE, the activity in real estate in India has definitely gone up. If you look at the amount of investments that have been made and the kind of platform deals that have happened, $5 billion of PE investments have already, happened in this current year, and $2.8 billion worth of platform deals with developers and investors have already been formed for various themes. So the important ones being, affordable and mid-housing segments, the warehousing segments.
According to data from Cushman & Wakefield, the top 5 PE deals that happened in real estate this year are between SR Group and RMZ for the Equinox Business Park project in Mumbai for Rs 24 billion, followed by Lodha and Piramal Fund Management in multiple projects of the Lodha Group in Mumbai for 23 billion rupees. In Delhi NCR, the deal was between JP Group and ICICI for 275 acres of land in Noida for 16 billion rupees, between L&T and Blackstone for the Seawood Grand Central Property Project in Mumbai for 15 billion rupees, and finally between M3M and India Bulls for their project in Delhi NCR for 13 billion rupees. Out of the total inflows into the realty sector, nearly half, which is 244 billion rupees, is expected to be made in commercial office assets, marking the highest ever annual investments in this segment noted since 2008. A trend that is driven by both PE and sovereign funds snapping up commercial assets in anticipation of getting them listed as a real estate investment trust or REIT. And real estate experts believe that confidence in the India growth story, coupled with larger deals in the pipeline, will see PERE investments grow even further.
With the dollar rates where they are, the funds are chasing, they're basically chasing assets across the world, particularly in emerging markets. And given India has done reasonably well in its GDP growth over the last couple of years, and the expected performance is going to be, quite positive. There is still a large office block transaction up here in north, which is expected to be almost worth $2 billion. If that goes through, then the private equity activity that you will see this year is almost 75% up. So depending on whether that transaction goes through or not, we're looking at either a 20% growth or a 70% growth in private equity activity this year.
Even the recent shocks to the Indian real estate from the demonetization announcement are being considered as positives by the private equity funds. In the past, investors have been wary of this sector thanks to its notorious opaqueness, with many funds burning their fingers in the past. Now, with demonetization sucking out black money from the sector and RERA imposing strict rules and regulations, there is hope that the sector will become even more attractive to both domestic and global funds.
PE in 2017 will be true PE. I think, if you look at real estate, a lot of post-GFC transactions have been mezz financing to developers, because there was lack of transparency in the system, so because of which debt was the only way to go. So, you saw pure debt, you saw structured debt, mezz financing, because of which the interest burden on the developers is very high. So, on the industry side, I think there will be a lot of consolidation, there will be a separation of men from the boys. And as that happens, equity will be able to find its feet again, which will be much, much less risky.
So how will this help home buyers? For one, transparent real estate sector will bring better investment in the market. This will in turn bring more supply in the market, allowing home buyers to get better deals, and also investors will get higher returns, making it a win-win situation for everybody.
In Mumbai with camera person Atik Khan, Ashwini Priyorkar, NDTV.